Okay, good evening, everybody. Welcome back to our YouTube channel, Fast CPA and Consultants. I'd like to welcome our CPA, Fulton Sanchez. Welcome, Fulton.
It's a pleasure.
If you're watching us for the first time, we started this section called Tax Talks a few months ago, where you send us your question by email or social media. And today's topic will be the best places to open up a company in the USA. Are we ready?
Yes.
All right. Question one. In which states can I open up a company where my name is not public?
There are few states here in the USA. One is, and very famous, is Delaware. Wyoming, Nevada also are states that do not reveal the information of the owner. These are known as offshore companies. When companies are open in these states, they're known as offshore companies. But you have to be you have to be very careful with this term. It does not mean that you are not going to pay taxes at the federal level. You don't pay taxes at the state level. It means that income in these states, Wyoming, Nevada, Delaware, there is no tax in the state. But at the federal level, you do have to pay taxes if your income is U.S. source. Here in the U.S., we have two classifications for taxes. One is at the state level or the province level, or the state level, and the second one is to the national level or to the federal level. These companies that are hidden, the names, the the ability, or say the virtue of those companies when they are the legislation that created this way to provide companies that do not show the names of the owners is for the protection of the identity of the owners who opened the company in these states in Delaware, Wyoming, and Nevada, for example.
Okay, what is the difference in tax liabilities to where you will incorporate?
It all depends of the state of those states that charge income tax for at the state level. As I explained before, there are two types of income tax, or there are two levels of income tax in the United States. There is the federal level, that is to the IRS, Internal Revenue Service, and there is the state level that you pay that to the Department of Revenue at the state. And for the most of the states charge income tax to companies. Let's say all of the states in the US, they charge income tax to companies, except for the states that are, let's say, considered offshore, meaning that the states that do not show the identity of the individuals. Those are considered offshore, and those states do not charge income tax at the state level. It means that in Delaware, Wyoming, Nevada, for example, there is no state income tax for companies. It is only they charge a different type of tax, a franchise tax. We speak about that in a further in a question in a next question, or probably two more questions. We'll speak in detail about that. But those states do not charge income tax at the state level. But remember, the companies that are open at this state, they do pay taxes at the federal level if the income comes from U.S. sources. That's it, you have to be very aware of. So states that do charge income tax, there is a tax liability at the state level for income tax. The states that do not charge income tax, there is no tax liability at the state level in states like Delaware, Wyoming, and Nevada, for example. But but those companies, as I said before, they do pay federal income tax at the federal level. All of them pay income tax if the income comes from U.S. sources.
Okay, so next question is, if you have a C corporation in Delaware versus an S corporation in Florida, which one is more beneficial?
It all depends of the nationality of the owner. For example, foreign owners cannot have an S corporation. They cannot open an S corporation. S corporations are only for domestic for U.S. citizens or U.S. residents. That will be the first difference, the difference that we have to be aware of. In general, a C corporation pays more taxes than an S corporation. A C corporation will pay right now 21% in profit plus 15% in dividends, but the 15% are paid by when the dividends are distributed, and 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 the person or the owner or the owner of the shareholder who receives the distribution is the one paying that. So 21% income tax for the profits of the C corporation is paid by the company. The company distributes the income in term the accumulated income or the profits of the company distributed in dividends, and when those dividends are distributed and given to the owner or to the owners of the company, the owner will have to pay taxes, federal income tax and state income tax, depending if the state charges that to the individuals. Will have to pay taxes at the individual level. So there is one tax at the company level, and there is another tax at the personal level that the individual will have to pay. Because here in the USA, there is also income tax for individuals at the state level. Many states don't, or a few states don't charge income tax. For example, Florida, there is no income tax at the state level for individuals. But for companies, there is income tax at the state level. For example, California, there is income tax at the personal level or individual level. There is income tax at the state level for individuals, at the state level for companies, and also at the federal level for companies and for individuals. So this is the differentiation that we have to have whenever we are dealing with C corporation and an S corporation. In exchange, an S corporation, as I said before, cannot be opened by a foreign citizen. It has to be a domestic, a U.S. citizen or a U.S. resident. And the corporation, the S corporation by itself, does not pay taxes. The profits of the S corporation flows. The profits flow to the individual, and the individual pays taxes from his side, from his or her side at the individual level in their income tax report.
Okay. Do I have to pay a franchise tax for the company?
Yes, but only in offshore states like Nevada, Wyoming, and Delaware. You pay franchise tax at the state level. Franchise tax is at the state level. Also, California, you also have to pay franchise tax, but only for LLCs. California is one of the exceptions. You have to pay in an income tax for individuals, income tax for companies, income tax for state at the state level. At the federal level, you have to pay also individual federal income tax and company federal income tax. But also you have to pay a franchise tax at the company level. This is only for LLCs. In other states, you do not pay franchise tax. It is only in the offshore states, Nevada, Wyoming, Delaware, and in California.
Okay. Do I have to hire staff for the company?
If you are the owner, you are the staff. You are supposed, if you are a U.S. citizen and you are not doing real estate, meaning that you don't have a property in the company, on the LLC, a corporation, C corporation, and you are renting and you are making income. If your business is not real estate, you have to have payroll. It means that for any other business apart from real estate, in an S corporation, a C corporation, an LLC, you are the staff. The owner is the staff. Therefore, the owner needs to needs to have payroll and pay payroll taxes.
Okay. And lastly, do I have to have a local address in the place where I want to create the company?
Yes, you have. The state will not allow you to open a company unless you have an address in the state. There are organizations or there are websites that provide these addresses for a fee. Here in Florida, we do the same.
All right, those are all of our questions for today. Thank you, Fulton, for being here and for your time. If you have questions, you can contact us through our email or social media. We'll put the information in the description below. Also, don't forget to subscribe. Thank you again, everybody, and we'll see you on the next one.
Thank you.